Okay, well, Taimur Baig is now joining us. He's Managing Director and Chief Economist at DBS Group Research, and he's with us here in our studios. Taimur, great to have you with us here.
Happy Diwali
to you.
Happy Diwali. Great to be here.
Thank you so much. We're all decked up, and I thought we were going to see you in a kurta pajama.
Huge opportunity lost. You guys are looking amazing.
We're going to thank you. I'm going to give you the opportunity again after this, Taimur. So how are things looking? 5 days to this big US election. Is that going to be it's going to dominate the news cycle, but will it dominate the market cycle as well, in your opinion?
I think there is enough on the economic and financial market side, independent of the election dynamic. Yeah. Just look at the GDP number out of the US for the third quarter, 2.8%. Look at the earnings. On the margin, disappointment here and there, but overall, very strong. Look at retail sales, both including and excluding autos, very strong. So the big sort of takeaway from the U.S. economic narrative is the underlying strength is undiminished. Despite all the high rates, despite all the anxiety about how much the Fed can cut or not cut, the fact of the matter is the economy is humming. Independent of who wins next week, hopefully we get a result next week, I think that underlying momentum remains.
And so 7th of November, you think we'll get a cut? Or you think the bar perhaps is not so high now for the Fed not to do anything?
I think the Fed has tied itself. It has to cut, both in November and there has to be a Christmas present in December. The question is 2025. I think the pace with which the market started pricing in over 100 basis points, maybe even 150 to 200 basis points of rate cut in 2025, that will have to be revised in a very substantial manner. And I think the long end of the market is telling us that already.
Yeah, now that they've spoken, they have to walk the talk, right? It's a question of credibility and their own projections. But Taimur, also, there's enough going on in Asia. This morning, I was looking at the PMI print from China. First time we're seeing expansion there. And that's really affected us because I think sentimentally, foreign investors started looking elsewhere as well. It was a bit of this, let's sell Indian equities, let's look for growth elsewhere. What's happening in China and what's your sense?
So clearly, there's a big valuation gap. Chinese stock market is basically trading at distress levels. Even after the rally that we saw in the last couple of months, they're very, very cheap. They're cheap for a good reason. There's lots of bad news and anxiety around China's outlook. But there are companies that basically print money. Very large market, very big e-commerce space, very big transportation sector, pharma sector. So companies that can finally begin to go beyond the overall gloomy construct of China can start delivering very substantial return to their shareholders. Even when I go to the US now, talking to money managers in the US who would not touch Chinese equities in the last 2 years, getting very excited, very interested. So I think there's a big pool of competition out there for the rather rich Indian stocks.
So this is interesting. You're saying the underlying Chinese economy may take its own sweet time to pick up, but some of these e-commerce plays and some of these specific niche companies will keep getting the capital.
There's definitely deep value in a variety of companies and sectors in China. In terms of research, development, commercialization of patents, pretty impressive what's happening in China despite 8 years of trade and tech war.
Hi, Taimur. Good to have you in the studio today. What about the Indian economy? How do you see things shape up out here? Because, till a few months ago, we were the only game in town. And suddenly you have, talk about China coming back into play as well. Pockets of Brazil are doing well. Could you tell us what is your estimates with regard to the Indian economy? What are the growth targets you're looking at? Inflation seems to be under control. And what are you pricing in with regard to the RBI?
So start with the RBI. I think they have room to be deliberative and data dependent. I don't think there is anybody in the country that's crying out for lower interest rates, given that, returns, nominal returns on selling, on doing well.
Count me. Lower interest.
So we have some exceptions.
You guys are not crying out for lower interest rates?
For sure.
I don't believe in debt.
I'm talking about a system-wide situation. Are we seeing spikes in NPL or are we seeing distress in credit? And the answer is no. And therefore, when we look at bank profitability, for example, things are fairly sound as far as the financial sector and individual participants in the economy's nexus is concerned. I think the economy has done very well since the pandemic. It's sort of come back in a roaring way. We've seen that reflect in the financial markets, not just the stock market, but also in the property market. Going forward, there is some noise around rural demand versus non-rural demand, outlook for exports. But I think those are on the margin. I think underlying story for India, which is one of substantial growth, both in nominal and real terms, remains high. And again, I talked about US money managers being excited about China. That, again, is a recent phenomenon. They've been excited for India for the last 10 years.
Indeed.
So you're not seeing this whole consumption slowdown be a real worry, at least as of now, here in India?
I think you're spoiled for choice. I think the weakness, again, is on the margin. Underlying story, most EM markets would die to have that.
But, but it's all relative, right? I mean,
Correct.
the incremental change is what sets the price. So we're cruising along and suddenly you've got a bit of a speed bump. And that is a speed bump, isn't it? Many are acknowledging credit. You look at credit card data. We had the largest car maker, Maruti, telling us that passenger car sales, small car sales are below levels where they were 6 years ago. It's not new data, we know that, but it's once again coming into sharp focus. So are we hitting a slightly softer patch for the next few quarters, in your opinion?
So I think the answer is yes, but also additional rejoinder is it's okay for a bit of a bump. I think 2024 is a bit of a reset. India is not the only game in town. There are other economies out there who will present interesting value proposition to investors globally. Even within India, there are issues related to cost of living, volatility around monsoons, some friction around how far India's export-oriented strategy can go. All of those things are legitimate concerns.
First cut by the RBI, December, or?
I think 2025 early.
25?
Yeah.
25.
I mean, and you're saying that 2 cuts by the Fed this year?
Right.
And nothing from the RBI?
Because domestic inflation concerns, I think, supersede what the Fed is doing.
All right, Taimur, we'll leave you there. Thank you very much for joining us. It's a pleasure. I hope that we get at least one and kick off the rate cutting cycle here in India as well. Thank you very much. Happy Diwali.
Thank you.
Happy Diwali.